What's happening is inventories moving from west to east, and I think that's finally beginning to really tighten the supply in the west. And if demand even stays the same and supply shrinks, you'll see higher prices. So I think that's what you're seeing is the arbitrage is finally starting to take effect. You've seen a rally over the last month or 2 months. You've got gold now at what, 2150 or thereabouts. It's a clear breakout. Wouldn't surprise me if we traded back down to 2070, 2080, test the breakout level, and then take off. But yeah, I think you're already seeing that.
BillHolter, a retired stockbroker and precious metals expert, acknowledges the recent rally in gold and silver prices, but suggests a possible retracement to test breakout levels before further upside movement. He also points out the potential for significant price spikes, drawing parallels to past rapid increases in metals like nickel. These gains follow signals from the Federal Reserve indicating potential rate cuts this year, which have weakened the US dollar. This scenario favors gold, especially after the yellow metal faced pressure from rising interest rates over the past 2 years. Bank of America Securities continues to view owning gold as one of its top trades for 2024. The latest Kitco News Weekly Gold Survey reveals a divided and cautious sentiment among market experts regarding gold's direction heading into the final week of the first quarter. However, retail traders are showing bullish enthusiasm. Kitco senior analyst Jim Wyckoff expects gold prices to remain range-bound next week, citing a temporary slowdown in bullish momentum. Holter points out a trend of shrinking gold holdings in ETFs like GLD and expresses skepticism about their composition, questioning whether they consist of real physical gold or synthetic ounces. Despite a slip in the gold price last week, gold-backed ETF trust funds expanded collectively on Friday, defying the typical correlation between ETF sizes and prices. The Spider Gold Trust experienced new investor inflows, while the iShares Gold ETF halted its liquidation. Notably, GLD saw its shares in issue increase significantly, requiring an additional 15 tons of bullion backing, marking the most significant increase since mid-October. Join us as we delve into insights shared by BillHolter. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
It's probably supply-oriented. We've seen a premium in Shanghai of $30 to $50 an ounce over COMEX and LBMA for the last, 4, 5, 6 months. And it's a clean arbitrage. So what's happening is inventories moving from west to east, and I think that's finally beginning to really tighten the supply in the west. And if demand even stays the same and supply shrinks, you'll see higher prices. So I think that's what you're seeing is the arbitrage is finally starting to take effect. You've seen a rally over the last month or 2 months. You've got gold now at what, 2150 or thereabouts. It's a clear breakout. Wouldn't surprise me if we traded back down to 2070, 2080, test the breakout level, and then take off. But yeah, I think you're already seeing that. We've seen over the last probably 6 months, and even longer actually, we've seen the amount of gold supposedly held by GLD, by some of the ETFs. We've seen position shrink. It's continually shrunk. And it's my opinion, if you read the prospectuses on a lot of these ETFs, they don't have to hold physical gold. They claim to hold X amount of ounces. My question is, are they real ounces or are they synthetic ounces? And my thought process is they understand what's going on behind the scenes. And I think what you're seeing is a closeout, if you will, of some of the games that they were playing. And that has affected the inventories of some of these ETFs. They're starting to dry up. So, I don't have any direct evidence of that, but my sniffer tells me that a lot of this gold is synthetic, and as they're unwinding some OTC positions, the long side obviously has to go also. So whether the long side is real or whether it's synthetic, I'm not 100% positive, but I suspect, as is everything else in the world today, I think the inventory numbers for years have been fabricated. So, you could wake up one day And if you remember what happened with nickel, it was up over 100% in less than 2 days trading. I do think that that's likely. You mentioned solar demand. The Silver Institute just came out with numbers of 1.2 billion ounces of demand, and the supply we know is just a shade under a billion ounces per year. That's showing a deficit, but I think the Silver Institute numbers are way incorrect because there was well over 300 million ounces used just in solar. So, if you add in the other uses and investment demand for silver, I suspect the deficit is way more than 300 million ounces.
The gold standard served as the cornerstone of the international monetary system for several decades, from the 1870s to the early 1920s, and from the late 1920s to 1932. It resurfaced as part of the post-World War II Bretton Woods system in 1944, enduring until 1971, when the United States unilaterally terminated the convertibility of the US dollar to gold, effectively dismantling the Bretton Woods arrangement. This transition away from the gold standard in 1971 marked a pivotal moment, coinciding with the establishment of the petrodollar system in 1973. BillHolter highlights this shift, arguing that it weakened the financial system's foundation by substituting tangible assets with paper promises, predominantly in the form of U.S. Treasury bonds. The decision to abandon the gold standard was influenced by its inherent volatility and the constraints it imposed on governments. By pegging currencies to gold at a fixed exchange rate, governments needed more support in their ability to implement expansionary policies to address economic challenges, such as reducing unemployment during recessions. Let's get back to the interview.
Once Americans by law were allowed to buy gold and buy silver again and hold the physical metal. So they've only been considered investments for what? 45, call it 50 years. And prior to that, gold and silver were money. Gold and silver were the foundation to the world's financial markets. And that changed in 1971 when the US went off the gold standard. And then in 1973, when the petrodollar was created, you had a foundation that was based on US Treasury bonds, paper promises. So the foundation has been hollowed out because those bonds are issued by a bankrupt entity that at some point in time is not going to be able to pay, or the markets are going to have to be flooded with dollars in order to make those bonds payable. When I say they're not an investment, the reason you want to own gold, or the reason you want to own silver, is because they cannot default in a world that is defaulting. And when people ask me, well, how much should I put into gold or silver, or gold and silver? And my standard answer is whatever you don't want to lose, because no matter where you have it, in any type of paper contract or any type of situation where you have an intermediary between you and your money, there's going to be bankruptcies all over the place, and you're going to lose your capital. And you can't, that can't happen with gold and silver because they cannot default. If you look around and you can see that the world is more indebted now than it's ever been on any ratio, any way you want to measure it, the world is more indebted. They've raised interest rates. That causes more stress. That causes more probability, or it causes more probability of default. The whole system, and we're not even talking about derivatives. So when we add in derivatives of 2 quadrillion, now you're talking about the gaming table is bigger than the assets on the planet. Just understand that in a system that is bankrupting, you want your capital in something that cannot bankrupt.
Given the divergent sentiment among market experts and retail traders regarding gold's direction, how do you assess the near-term outlook for the precious metals market? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.